Hi friends, welcome back, or if you're new to our channel, welcome to my channel. Today we're going to talk about a housing market prediction for 2022. So if you're buying a home, moving, relocating, there are 9 things that you need to know if you are thinking, considering, or hoping to buy a home in Salt Lake City, Utah in 2022. And before we get started, I'm Anya Bartholomew, your Utah local real estate agent. So therefore, if you're looking to buy, sell, relocate, don't be a stranger. Click the button, click the like button, subscribe, and most importantly, contact me with whatever real estate needs you might have. The first thing we need to understand is even though we all think that the home prices are historically high, record high, we often miss the fact that the inflation is much higher, right? And therefore, we all remember that there is a news and there was this release saying that inflation is no longer transitory. So we are in a pretty long stretch of inflation, and therefore we could expect home prices to go up. And if you're staying up to speed with my channel, you already know that in 2019, the average price in Salt Lake City, Utah overall actually, was $395,000. And a year later, it was $500,000. It's more than $105,000 increase in the average sales price in Utah. Therefore, if those of us who didn't buy in 2019, all of us were paying $100,000 more in 2020, and compared to 2021 right now, we went up another $83,000. So for those who are waiting or have been waiting for the last 2 years, the price just increased by $183,000, and that's a big price. It's a big price to pay. And I guess when I'm saying with the inflation, going higher and higher and higher, with all of that, we can only expect the prices of assets to increase. And that brings me to point number 2, which is actually investors and corporate buyers. Well, we all know that this has been increasing. First of all, because it's becoming less and less affordable for normal people. But, corporations don't care. They want to save their money from inflation. So we will continue to see corporate and investment buyers is actually continue to increase, putting so much more pressure on the market that's already super tight. And if you like specific data, why it is important in Utah? Well, there is a new report released by Redfin that states that analyzed 85 metropolitan areas showing who actually gained inventory. There were only 4 states, but the states that lost inventory 50%, there were actually Salt Lake City, Utah, and Sacramento. Number 3, that's the factor that's absolutely, totally, completely underrated, and that's rent increase. Think about all of those renters that are having experience in spiking rents and then started thinking, well, if I'm paying that much for the rent, shouldn't I be buying a house? So that would be a huge factor. Again, as I said, totally and completely underrated. And specifically, it's going to be a huge extra demand for Utah because Salt Lake City, of course, also another prime real estate market in the state of Utah, because in Utah, there is no rent control. And in fact, there are landlord laws that favor the landlords. In fact, at the end of the lease, the landlord can raise the price or raise the price whatever they want. And therefore, that will be a significant increase in demand for 2022. And that leads us to number 4, and that's actually unemployment. Utah specifically has the lowest unemployment in the nation. So we have a lot of people that are making good money, and and therefore, with unemployment being so low, we will not see a decreasing of demand, especially with more and more millennials joining the prime house buying phase. Number 5, I'm going to talk about the factor now that absolutely, completely overrated. And yes, I understand, talking about interest rates, yes, I understand that the increase in interest rate will affect the housing market, but this is all a speculation for the next 2022. Even the interest rate will increase up to 4%. Therefore, the inflation being, officially right now 10%, which I suppose is much, much, much higher. There's a lot of free money between that spread, 4% and 10%. Therefore, the interest rate is not going to affect that much the demand that's continue to increase. So far, we've covered the main factors on the demand side. So let's look at the supply side. Well, sellers, they're probably not going to crazy list their inventory for sale, because if they list and sell their house, they, like where are they going to buy? Because there is still a shortage of inventory. And at the same time, also talking about inflation, they know if they sell it right now, a year from now, they will be outpriced of this market. I actually have a client that actually made this mistake. Supply side number 2. Well, we hear a lot about foreclosures. Yay, there is this, this and this happening, and everybody is speculating on the foreclosures. And yet the numbers for the forbearances are absolutely ridiculous. They've dropped dramatically since, like we experienced it in pandemic. And right now it's less than 1% of the entire market. And even on any health year, we have it over 3% foreclosures. Another amazingly important supply factor, in fact, it's one of the factors if you and I could fix, we can fix the housing market. So listen carefully. I'm talking about new construction. I'm going to bring to your attention the most dominant on my mind, at least, because I really care about this market. I care about the buyers moving in and, making it their home. Well, we've got to remember what Harvard Business School reported to us a few years ago. They concretely concurred. They said that shortage of inventory is man-made by local governments, meaning we are restricted, the builders are restricted by insane, very conservative, very not up to speed with what's happening to the market, housing and zoning laws and all of those, regulations. And therefore, if we can make a difference and we can make an influence on those local governments, and we can, I know cases when it's been done, I know states and provinces where it's being done. So for guys, this is our biggest hope, and we've got to go for it in 2022 if we want to live a much more balanced market for our kids and grandkids. And therefore, the cost of waiting for another, crash or for any speculations that you're hearing out there is enormous. It's much higher, in fact, than buying right now and, riding the wave of appreciation and inflation. And, to be brutally honest, I'm thinking if we're talking about crash, we're going to see an inverse crash. We're going to see a crash of dollar and actually the continuous increase of, assets, including especially specifically real estate. So far, we've covered the most critical factors of the demand for 2021 and of the supply of 2021. And based on those factors, we can see that the market will continue to increase. And therefore, all the numbers that I provided takes me a lot of time to research. But anyway, if you like this information, if this is helpful for you, click the like button, subscribe to my channel. I post regular real estate updates. And if you're buying, selling, relocating, investing, would love to be your resource for you. My information is below. Let's chat.